This one is for all my investors out there. Ivan Stoyanov here with the Stoyanov Group, and in this video, I'm going to be talking to all the investors out there about how to find great opportunities in this market. I'm an investor myself, so we can all agree that before starting to look for a great investment, we got to ask ourselves a few questions. First question we got to ask is, what kind of investor are you? And second question we got to ask is, what kind of investment goal do you have? Now, before we even get into those questions, we got to ask ourselves, when is the best time to buy an investment, and is that time now? Well, the simple facts are that home prices in the GTA have fallen 20%, and at the same time, rental prices have gone up 20 to 30%. So, you tell me, is that a great opportunity? But Ivailo, interest rates have gone up, my monthly payments have gone up. Absolutely, I completely agree with you. However, we all know interest rates are not going to stay this high forever. Interest rates are most likely going to come down at some point next year. However, you would have still purchased your investment at a 20% discount from the peak. On top of that, we all know once interest rates start coming down, buyer demand is going to increase, which is going to start putting upward pressure on prices once again. But enough of all that. Let's get back to answering question number one. What kind of investor are you? Are you the type of person that's okay dealing with tenants? What about multiple tenants and multiple units? Or maybe you're just not looking to deal with any tenants. Maybe you just want to buy, renovate, and flip a property. Are you a contractor, or do you know a contractor that is able to do renovations at a really cheap cost? Are you looking for a long-term hold, or are you looking for a short-term hold? Now, let's get into question two. What is the main investment strategy or your goal with purchasing this investment? Well, Ivailo, I just want to make money. I get it. But are you purchasing this investment for cash flow positive reasons, or are you looking for appreciation? In an ideal world, you're going to get both cash flow positive properties and appreciation at the same time. However, the reality is that because properties are so high priced in the GTA, unless you're putting something like 50% down, there's very few single family residences that are actually going to cash flow positive. So what are the options? Well, in most cases, you're going to see the highest appreciation in single family residences or duplex homes. However, with those properties, you might be just breaking even or cash flow negative depending on how much money you put down. If you're looking for cash flow positive properties, we gotta look into the multi-unit residences. You can start with 4 units, move your way up to 8, 10, and then even more. In most of those cases, if you purchase the right investment, you should be cash flow positive. However, your appreciation is gonna be less and you got tenants to deal with. However, to offset that problem, if the numbers work, we could just hire a management company to take care of that for you. At the end of the day, the most important question is, do the numbers make sense? Do you know how to check if the numbers make sense? If you don't, well, we do. We use our own property analyzer to see if all the numbers make sense and what your cap rate is going to be on each potential investment property. We have helped so many clients with our property analyzer to make the best investment, which makes the most sense. So all you need to do is pick up the phone, give me a call, and I'm just going to take care of the rest. Hope all of this was of value to you. Cheers.